Hey, this Chris. Can you hear me okay? Sort of cool to nail the market correctly. You had all these people say, oh, we're going to have markups on the close and all that. So, what were we doing? We were doing the opposite. So, we were doing this. So, if you were wondering, it's been on the free videos, it's been on our patterns mastery all week. And I want to show you what we're talking about. We're talking about the ES versus the bonds versus the Russell. So we're going to take on the right, we're going to take the ES on a daily chart. And we've been all over this, so don't think this is hindsight trading. So here's the ES on the right. So now forget about the 20 moving average. We'll use those sort of to stay on the correct side of the market short term. But for longer term trends, we look at the 50. So just keep that in mind. So the S&P is at the 50 on the right. On the other hand, on the left, go look at the transports. Yeah, way under the 50. Way under the 50. ATR trailing stop, more for daily intraday, but I still use it. There. So there's your transports in relation to the S&P. So you see way under it. So there were two other levels that we've been harping on. One of them is that 50. The other one we've been harping on is the May 1st levels. So you got the May 1st, you have the 50. Now, if it was only one thing, yeah, I wouldn't care about it. Now, a lot of people talking about Dow theory this, Dow theory that, because the transports have gotten nailed. Dow theory has to do more with the Dow. And yep, the Dow went to May 1st levels. So, but you have the transports, you have the Dow. You have the Russell at May 1st levels right there, May 1st and at the 50. So how about the bond market? It's under the 50, and guess what? It's at May 1st levels. The moral of the story, rebalance. Yeah, we've been all over this. It was nice. One of our fellow content providers that's been doing this as long as me, I'll just tell you, his nickname's Methuselah. But basically, he was like, you had this nailed all week, and I'll show you what we're talking about. So you have these. I just showed you about 4 different things under the 50 at the May 1st levels. Now go look at the ES. May 1st levels are there. Then you know which one's been the one that's outperformed the most is the NASDAQ. So not only is the NASDAQ over the 50, but it's way over the May 1st levels. So the reason this matters is 50-50 funds that are long bonds, which are May 1st levels, and long stocks, which are way up in the stratosphere. All of a sudden, their composition is a lot more stocks and bonds. So they need to sell stocks and buy bonds. What's outperformed the last 2 days? Bonds. What's underperformed? The NASDAQ. So and then it comes down to how do you play it? Do you play the NDX? Do you play the SPX? Or do you play the ones that the hedge funds are going to have to sell? So which are the ones the hedge funds are going to have to sell? The high flyers, the Apples, Microsofts, the Googles. Now, and guess which ones are getting rocked today? Yep, those. Those are the ones getting rocked. So they got rocked yesterday. In fact, a lot of the Dow stocks that were underperforming. Keep in mind the Dow was already at May 1st levels. They gapped up yesterday when the NASDAQ stocks gapped down. Pretty cool. So pretty cool. But all of these getting pummeled. Yeah, the biggest hedge funds once. So this morning when they open up, yeah, you might say, well, you short the opening. Damn right you short the opening. But just keep in mind, we don't just do that kind of trading. We also do arbitrage stuff. I traded ARB stuff for over 10 years, traded on the floor of the SIBO for 8 years, but I'll trade all shapes and sizes of stuff. So what am I talking about? So I was going to just go and buy cheap puts in the SPX, which of course worked. Yeah, you buy a couple a lot, you make probably $400 and, 20 points. One lot, more than 400, let's say $1,000. Well, I did it a different way. So we went for this. Now, Here's HubSpot. You might be like, what the heck does HubSpot have to do with anything? Well, the rumors HubSpot is going to get bought by Google. So for, let's say, $32 billion. The problem is, and I'm telling you, you got to do this. It sounds unscientific, but it works. So what are we talking about? Well, if HubSpot is 640, when it comes out that Google's rumored to buy it for $32 billion, and the market cap when it was 640 is $32 billion, then why buy it? I mean, yeah, what are you going to do? Buy it? I mean, they're already saying where they're going to buy it. So if it's trading here and they buy it at $32 billion, the stock's going to go down about 10%. Reason is usually takeovers have a 10% discount. That's called a take under because the stock is under where I was trading. But the reason I'm showing you this is MongoDB. That's also, in my opinion, a takeover candidate when it's this low. MongoDB is half the market cap. So MongoDB is half the market cap. 17 billion at most. It's really about 16. So the whole idea is not only is it half the market cap, so that's one reason. So you have one reason. That's not enough to blindly buy it. Now go to a monthly chart. And it's at support. Now you got two reasons. In fact, I showed that. I just shared that chart, but I'll show you with MongoDB. So here's MongoDB way down here, and I'll take it on a weekly. There's your monthly support. So there's your monthly support. So now you have two reasons. You have rumored takeover, monthly support, and what's the last reason? It got blasted and they widened the market on the options too much. What does too much mean? Too much means that if the markets are, if the stock is only $17 out of the money, look at the June 21st. Yeah, they panicked them. See these? That's me. Yeah, 270. So and I'll show you what we did. So I bought some too early. So I bought some at 5, some at 350, 10 at 270. So then flipped them at $4 and 420 and 480. So, I would have made in the index, but we turned around and did this instead and made our $1,200 and we're out of there. Real money, $1,200. So that's it. These were all posted. Now you might say, aren't you long 5 options? No, I'm long 5 shares of stock. Let it go up $10. That way I won't be pounding the table pissed off. I'll make an extra $50. In this type of environment, you take that quick $1,200. And that's what we did. So we could have done it with the indexes, but I did a creative idea. Now, let me just show you something with MongoDB. I'm not writing off this on Monday. Now, most takeovers happen over the weekend. So if this doesn't get taken over, you probably see it test a low, and then I'll try to lowball some calls again. So now there is another little, like I said, I've done these a lot. So another thing to watch in here is this, open interest. If something is going to open way out of whack, what I mean is the market makers are going to widen the quotes. That's what we did when I was on the floor. So let's say the 250s theoretically are worth $4. But if it opens down here, you're going to make the bid like 1 offer 6. Because you want where you buy them so cheap that if the market goes down, you'll still make money. So that's why we lowballed calls. I'm long all the 5 shares now. But there's another little thing that all of you can also take advantage of. And what you can take advantage of in here is this. Open interest. The more that people are going to be hooked and panic on the opening. That's why I was real nervous on the opening because there wasn't that much open interest. How on earth did I get filled at 270? Because that was probably a lot of people that bought the opening and puked it out. But ideally, you have like 3,000 open interest. If you did, you probably would have seen the opening bid 1, offer 5. So just keep that in mind in there. These are ARB things. Did I play HubSpot? No. Like I said, I think it's a take under. Did we play Google? Yeah. And let me show you. Here's another ARB thing. I don't know if anybody else shows you this kind of stuff on internet. So this just from experience. So look at COP. COP is buying out Marathon. If they do it with stock, which is what they did, what happens? The one that gets bought out goes up. But the ARBs short the acquirer, which went down. Yep, the acquire. If you're doing it with stock, ARBs like me, short that, buy that. If the spread's out of whack. But you almost always, the acquirer goes down unless they're buying something on the cheap. What I mean by that is if MRO was down here and COP was up here, they're using their high price stock to buy a cheap stock getting pummeled. Just like right now, you see MongoDB getting pummeled. So the whole idea is that then it might go up because they're getting it at such great prices. Now they all went up together. So it's just ARB. So why am I showing you this? Because HubSpot, the rumor is Google buying it out with stock. So, I just talked about 3 reasons. So the options too wide in MongoDB, the weekly support, and rumored takeovers. Well, now you got another one. If HubSpot gets taken over, then Google's going down. Well, that doesn't mean it has to go down that second, but you want 3 reasons. What are the 3 reasons? Number 1, the acquirer. But here's some good reasons for you. Guess what? You go back to your trusty hedge funds. Alphabet. Yeah, 795 hedge funds own Google. So even if Google doesn't take over HubSpot, it's probably going down on Friday because of rebalancing. Number 2 is if the rebalancing doesn't work, and let me just tell you, a lot of people get this wrong. It's just like about unusual option activity. You got to be picky. When I talk about those 50-50 funds, that is not every month. So there are 3 big rebalances. The third Friday of the quarter has the S&P rebalance. That's different. The end of the month of the quarter, you have a quarterly rebalance of funds, but most funds rebalance every month. So keep that in mind. But just like unusual option activity, you have to be picky. If the SPX is here, so if the SPX is like in this zone already, and the bond market is here, theoretically, you're not going to have a rebalance. Not every month do you have a rebalance. So just keep that in mind. Not every month. But getting back to it about Google and HubSpot. So even if you didn't have a rebalance, let's say you're like, yeah, I don't believe in that stuff. Well, heck, Google could go down anyway because who in their right mind wants to be long it over the weekend? Because they might take over HubSpot because 80 to 90% of takeovers are over the weekend. So we shorted Google. Luckily, I did it in 2 separate rooms. I did it in the central room and the chart patterns mastery room. Did I short it this morning? No, I got preoccupied with MongoDB. But boy, this is what I mean by the easy trade. Yeah, there's your easy trade. There's your Brecher ledge. A Brecher ledge is after a sell-off, the horizontal consolidation. So you had the rebalance, the possible buyout of HubSpot on the left, and the Brecher ledge. That was a layup to go short it. Like I said, we were already short. We were short the XSP and we were long MongoDB. That's good enough. But that was a good one. And I'm not sure it's done. But I have a 4th reason. Strike price plays. So I know all of you have heard all about this. All this stuff about walls and all this stuff. That's garbage in my opinion. It's evenly dispersed puts and calls. I can tell you that from experience of being on the floor all those years. If I have spreads on where I have puts, I have calls, I have stock, then I'm going to have to unwind if it's near the strike price. So when you see unusual stuff, I can't tell you how many people were talking about 1150 or 1200 in NVIDIA. You got to have evenly dispersed calls and puts, because that's what the spread traders, where they have to unwind. If there's only unbalanced on one side, just take it off. You got to be picky on this kind of stuff. 1150 open interest, 15,000. 1150 puts, 4,000. Not balanced or reasonably balanced. How about the 1200s? 1200 had 15 puts, 27 calls. How many places, if you go on Twitter and put in call wall, how many people said it was going to 1200 because of that? That's bunk. You need it on both sides, both sides. So going back to it, where is the big open interest? So 1100, 11,000, 15,000. Where do you think it's going? What it means is, not only do you have this, where NVIDIA is owned by 684 funds, not only do you have that, and the NDX might be a sell as a group, but you have this open interest. So that doesn't mean you blindly have to short it, because the stock on the opening did this. What it means is, once it starts going down, bearish patterns are more likely to work. So when you see a bearish pattern in NVIDIA, ultra short term, you can play the weeklies. Now, was NVIDIA a good one? It was sloppy. I didn't play NVIDIA. You could play it to 1100 though. It worked great. Worked great. The problem is, where do you draw a trend line that was a defined low-risk trade? There wasn't one. So I didn't play NVIDIA. Google, I already showed you. Layup. How about Apple? Well, here you go. Where's the open interest in Apple? And we did this trade. This is another trade we did, and it was scalable. You could have traded 1,000 if you wanted to. So I'll show you what we're talking about. Hedge funds. What's number one on their list? Apple. Oh, what did I think Apple would do? Well, I thought eventually it would go down. So it's still holding up better than most. But the whole point is, if you were playing on the NASDAQ going down and the Apple being rebalanced, it doesn't mean Apple has to get killed because they have a big buyback, but it means it's less likely to go up $10. So what happened up here? So here we go with 3 reasons. You got the rebalance. That's one reason. You got that hedge funds own it the most. That's 2 reasons. And you have the massive resistance at 192.5 as a backstop. As a backstop, I'll take off all these drawings. These were all drawn before the opening, by the way. See that? See that? We call this the hook trade. We can call it the bag holder trade, hook trade, whatever you want to call it. That red reversal candle, that, or the stuck trade, that's where everybody long was stuck. Don't you think that if it gets to test it, everybody's going to be thrilled to be able to sell there? So what do? Well, I'll show you the first thing. The first thing is, on expiration day, if this is right at resistance at noon, what are the 192.5 calls worth? Well, it's pretty easy this time. We're going to go back to on demand. This is a rewind. We're going to May 24th at 11:51. If that looks interesting, it's the same time almost as now. All these arrows were drawn earlier. So May 24th at 11:51. Where was the stock? 190. See that? 190. Right here, 190. So where were the 190 calls? This is last Friday at 11:51. Where were the 190 calls? You're going to see they were 43 cents. At the money, 43 cents at 11:51. So what's that mean to us? Well, where do you put in to sell those calls if you go on your theory? Your theory is the stock at the most is going to go to 192.5. So if it goes to 192.5, if those 192.5 are between 60 and 80 cents, it's a layup sale. Because where are they going to go? So, they were worth 42 cents last Friday. So if you sell them at the money at 60 cents and nothing happens, you're going to make about 30% on your money. So what do? We sold them at 60 cents, bought them at 40 cents. Bought them at, where did we buy them? 33 cents? 34 cents. So we sold them at 60 cents, bought them at 34 cents. They're now 4 cents. The whole idea is you were pricing the options, betting on going on call activity from last week and call prices from last week and chart patterns and rebalance. That was a layup. We could have sold 100 of them. So, and then what? Could you have done something else in Apple? Yeah. There you go. There's your trend line. The more points of contact, the more likely that's going down, especially if the overall market's getting pummeled, which it was. So keep that in mind. The other thing, and you can look at this. I posted it in the essentials room. The market's on the low, getting pummeled. What did we just talk about in MongoDB? There could be a rumor takeover. Put the NDX or the NQ on the left. I mean, it's ugly. It's on its low. On its low. Holy cow, on its low. Where's the MongoDB, the rumored takeover? Not going to believe this. It's on its high. That's not a coincidence. I'm just telling you, once you get all the pencil pushers and analysts and ex-traders that are now analysts going over this, they're going to be like, why isn't Google looking at MongoDB for half the market cap? That's why we messed with MongoDB. Now, I know it's going to be tough, but this is really going to be a better buy over that. That's a rectangle. If it gets over that, it could go all the way back to up here, 250. So just when I'm not on, I would watch that. I think that's going to be pretty exciting. So the next thing you might want to know is how about unusual option activity? Well, it's hard. When the stock's down 80 points, you're going to have a lot of unusual option activity. That's not that easy. There's another thing, and this is something that I'm still trying to figure out a scan. Change in an implied volatility. I know about implied volatility rank. So next Wednesday, I'm getting on for a half hour in the essentials room, building some value in here about how to look for unusual options. This is how it was on the floor. When I was taking trading takeover stocks, we traded a lot of Motel 6. So one day Motel 6 went, let's say, from 20 to 19. But I was in the pit. I walked over from the IBM pit because this had like 100 people in it. Went from 20 to 19. But the calls went up. There were 10 brokers in there. When we were trying to sell calls, we'd say sell 100 and they'd go buy them. Just buy them. So, that's how we knew this, that even if the stock was heavy, somebody knew something. Sure enough, it got taken over. I don't remember the price, like 30. So what did we do? We sold the calls. And we turned around and bought them ahead of them, using the floor brokers as our leaner. That's why a seat was so expensive. But the point in there is change in implied volatility. There isn't a scan I found where you can watch a stock go down, but the calls go up, which would be an intraday change in volatility. I haven't found how to do it, but I can show you intraday in MongoDB. So all I'm going to do in here is take this. This is just a chart. I can't scan for it. So we're just going to take implied volatility. There's implied volatility, rank, all this stuff. They don't work for what I want. I want when the implied volatility, see the increase, that doesn't work that hot. I wish it did. So here's implied volatility, MongoDB. Now, theoretically, before I even show you, I know it's NASDAQ. Before I even show you, you would think MongoDB's implied volatility would go up, up, up into earnings and then die this morning, just stay down. Just stay down. Well, let's see. We're going to go to a 1-minute chart of MongoDB. And you're going to see in here that after the opening, guess what? Look what happened. The implied volatility went up, not down. Check that out. There's your death on the opening. And instead of the implied volatility getting destroyed all morning, it's gone up, not down. Sorry. There. That's what I want to show you. It shouldn't be rallying. The implied volatility shouldn't be going up. As you see, it's slowly going up. Now, I'm telling you right now, if I start seeing this go to here, and I see this on the bottom go to here, well, what that means is there's big call buyers, that the call buyers aren't going away. So the implied volatility goes up, and I'll be watching that all day. So that doesn't mean I'm doing anything this second. But definitely, like I said, I'm along all of 5 shares. But that's something I'm going to be watching. So just keep that in mind. Now, for next week, what do you do? Well, number one, the ES is getting to the 50. What's it mean for today? Well, I'm a little pissed off because I was hoping we'd have a bounce so I could short the crap out of everything. Now, we're getting oversold. That doesn't mean to buy. I just can't stress that enough. You can stay oversold. I can't believe all the people and all the pundits and all the sites I see that keep buying on the way down because they always get bailed out. Buying here and buying here and buying there. If you want to buy on the way down, at least have some moving average reclaims. So if you want to use a 20 moving average, that's fine. And that's the other thing. I don't see any reason to buy yet. We could have a bounce. I want to short every rally because of rebalance, which means right now you're oversold. I'm not touching anything. But if you do use moving averages, I'm telling you, most funds use a 9 EMA, a 20 SMA, a 50 SMA, a 200 SMA. On the other hand, if it makes you happy to use a 21 EMA, that's fine with me. Because the way I look at it, it's all about being on the correct side of the market. We go over this all the time, whether it's a 15-minute or 1 minute. If you're going to buy something, you better have it over something. I use the ATR trailing stop. I use the 20, intraday. But the point is, you'll hear me a lot say, I need to see it over something. Well, it isn't over anything. This is going to be a lot better buy if it gets up to here and then all these moving averages start to curl. That's what we mean about it's got to get over something. So you don't have that yet. So, and like I said, you can use a 21 EMA like the upper left. You can use a 20 SMA. And let me just show you something because people get this a lot wrong. This is intraday. You don't even see the change. That's what I mean. It's so close. All you're caring about is a change in direction. The EMA and the SMA work very similar. So I don't want to be an EMA, SMA snob. You can use whichever one makes you comfortable. So that's all I mean. So whichever one makes you comfortable, don't get stuck on the little details. You're just caring about being on the correct side of the trend, whether it's the ATR trailing stop I use or these moving averages. For a daily, I'll also use it for another thing, not the EMA. I don't use that. Well, I will use it in one way. If I see the transports and the Russell and all that plunging below the 20, that's a big warning sign for the S&P. But for trend, I like using the 50. But if I see this on the right and I see the transports plowing under, that's sort of no pun intended with like deer in the transports. But if I see this and I see the transports under that 20, so back here, because the 20 is more reactive, then that's a warning sign that this at the minimum is going to the 20. So with this plowing this far under the 50, then that means this should go to the 50. That's why we've been short, or let's put it this way, we're not long and we're not averaging down. So I've done it 43 years. That's a loser's way of doing it, of averaging down. So how about the Russell? Yeah, the Russell is under everything. The YM under everything. The bond's under everything. So I'm just telling you, is I use it for either relative to other indexes or the trend. So I just want you to know, on a trend intraday, I like using the ATR trailing stop. So hope that helps. So that's what I wanted to show you, all about relative strength. So why on earth should I buy a dip? Is there any reason to buy a dip? No. You're looking for bearish consolidation patterns until proven otherwise. So my first objective with the whole market, I've been just harping on this, saying the NASDAQ could be down 500 one day. So why could the NASDAQ be down 500? May 1st levels. So now we're going to take everything off. I'm going to take everything off. I would shield your eyes, but that's what I'm doing. So let me show you what we're talking about. We're just going to make this as simple as possible about May 1st levels. So on the left, and I'm going to, Essentials room, I can copy and paste it. I can't in the YouTube room. There's your May 1st. Now, we have been posting these. If you go to StockTwits, I've been posting these the entire week. The entire week, I've been posting these charts. So if you go under Christopher Brecher, you'll find it. May 1st. All right, where's that put the NASDAQ? Right there. And I'll put this in the Essentials room so you have it. But this is the objectives we've been looking for. May 1st, May 1st. So here you go. So we already called NVIDIA about it going to at least 1,100 and maybe lower because of the hedge funds. That's what we were talking about earlier. So went over that. And we, a number of us on Chart Patterns Mastery shorted it today, especially Penn shorting big. May 1st levels, May 1st levels. Just copied it for you. Now on the left, May 1st levels. And on the right, the Russell. Yep, guess what? May 1st levels. This just gives you the objectives. And as you see, the Russell hit it. The Dow hit it. So the probability is bearish patterns are more likely to work in the NASDAQ and the SPX. That's all it means. It's all about probability. So in answer to where the ES could go to May 1st levels. That's another 66 points. How about the NASDAQ? You don't want to know. Could go down another 200 points, 300 points. That's May 1st levels. And then everything will be in line. Then that bond market sell-off, that yes, that went to May 1st levels. And I'll show you. There's your May 1st. There. So if this could go to May 1st levels, which would be a real hammer, but I mean, just getting hammered, not a hammer like a chart. And this is already rallying on the left. Finally, you have some positive divergence. And then I'll get bullish. So, but that's your objective. Now, you might say, aren't there other objectives? Well, let me copy and paste this. And like I said, we went over a lot of this right when I got on the Essentials room and all morning. So bonds have nothing to do with it now, other than they were supposed to be bought, which they were, and stock sold, which they were. So now this only means that if this gets to the objective on the right, it means not to buy it. It means to look for bullish reversal candles. I never buy on the way down. I just don't know how anybody buys on the way down. You buy on the reversal pattern. So, and I'll show you an example. But on the right, why is the NASDAQ stuck down 310? It's stuck because prior support, there's your little coagulation of support. That's why it's stuck in this area for now. So if I was short, that's the first place I'd be taking back some. That zone. Then you got that. That's your May 1st levels. So I'm going to go and color this for you. There's the first support zone. And there's your May 1st levels. So I'm going to make this there. That's pretty. There. That's my objective. Now, let me just tell you, when I look at this, because you see the bond selling off on the upper right. When I talk about objectives, though, this is what you're looking for. So you're looking for like a McDonald's. Now, what am I talking about? Here we go again. I don't just blindly buy dips. I'll buy on the way up. This is a Dow stock. So if the Dow has to come back and CRM isn't going to lead it because it's in the Dow, you're going to have participation from other stocks in the group. So there's a bull flag. You're not buying the bottom. You don't know when that's going to stop. I think that's stupid to buy it on the way down. You don't know if it's going down another 30 points. You don't buy it here. That seems stupid to buy it on the way down. You got bailed out. You buy it on the direction. So I'm buying the direction. Now, I'm not buying it today, even though it's acting great. This goes with the Dow stocks being bought and the NASDAQ being sold. And that's what's happened. But for now, I just want to show you an example of what it looks like when something is turning and then consolidates. So with the NASDAQ, has it turned? No. What in there looks like it's turned? Nothing. Did it turn at times in the middle of the night? Heck yeah, look at that. So if you're new, what is this called? Well, if you're new, you wouldn't know. This This is an intraday Stewie pattern. If you highlight it, sort of looks like Stewie from Family Guy. If you're going to buy on the way down, wait for the consolidation. Did you buy the bottom? No. How do you know that wasn't going to go to here? You wait for that inverse head and shoulders, and then you at least, if you're wrong, you're going to lose very little if you're wrong because you're not buying on a plummet. But that's your inverse head and shoulders. It took some time to develop. Do you see that on the right, bottom right? You don't see anything like that. The problem is if you're watching every tick and it does this, you're going to give up, even though then it'll probably form that. And then that'll be the bottom. You're not there yet. So just keep that in mind. That's the way I look at it. So there's your inverse head and shoulders, and you don't have anything that looks like that yet. That's all I wanted to mention. Not yet. Maybe you will later, but not now. And that's where I am right now. Unfortunately, it's going to be a waiting game for the next hour. I wish this was only down 19. And then I'll play it on the downside at the close. Now I'm not sure. So definitely you wonder if the funds have already rebalanced. So I'm not going to try to overanalyze that. We shorted Apple, a lot shorted Nvidia, and I'll tell you, the big reason Nvidia is going down is just because of this. And this was on StockTwits as well. What are we talking about? SMH outperforming the software stocks. So if, I hope you were able to follow me either on Chart Patterns Mastery or at the minimum StockTwits. Here you go. There you go. That was the semiconductor about the divergence. So just keep that in mind in there. That's see if that's the SMH. Yeah, well, it worked. So I'm excited about that. It worked beautifully. So as you see, that finally got nailed. And it still isn't nailed much. Just keep in mind that this is May 1st. So to me, this is all rebalancing. So most of the time when you get a top, because heck, it had a top. So you could say that's a top, but the big swing trade is usually after the first reaction, and you can draw a defined trend line like this. And then you get the good move for the swing trade. So this took forever. Right here was all of 5 points. I know it because I was trading it. This went down 24 points in 4 days. So just because it's down 1 day, I would rather see it do this right here, form that kind of trend line, and then that and breaking coinciding to when I do a class on selling short. So that's what I'm hoping for. So now, that's a tough one. That's where I think it's going. Another 50 points. So that doesn't mean I'm shorting here. 2 oversold for me. 2 oversold. But that's what I'm ultimately looking for, whether it's today or the first thing Monday morning. So rebalancing, it depends. Sometimes rebalancing has led to sell-offs the next morning, or because it's not always on a Friday. I mean, it can be on a Wednesday. But the thing is, if there's massive selling on the close, a lot of times dealers are stuck. But that's a great question, Amir. Let's look. It's a great question on your part. Let's go to other monthly. Now, keep in mind, though, that it has to have that massive disparity between bonds and stocks. So let's look. So here's your SPX. I'm clearing all the drawing set. And then the bond market on the right. It doesn't happen every month, for sure. So when else did it happen? Well, we'll have to put a daily. So how about April? What happened in April? Yeah, here we go. So you got April 1st was up here. Is this a good theory on your part? Let's see. There's April 1st. So April 30th, yeah, right at the bottom. So there's April for you. The problem is, what the S&P do that month? Well, you're going to see this is why it didn't work as well. There's April 1st. And there's April 30th. And it just wasn't there. It worked a little, as you see, a day before. But you're right. What happened right afterwards? It went straight up. It didn't hurt that bonds rallied. But where's been other big disparities? How about March? So March, non-event. Trough to trough. All right. How about February? What did the bond market do? Well, it went from here to there. And yeah, that's still not that big. That's Feb. What did the markets do in Feb? The S&P. Yeah, went straight up. But like I said, the bond market didn't go down enough for it to matter. And as you see, it didn't matter. The markets went down a teeny amount, but you're dead right. They went up the following day. So you're right, sort of. The problem is this time the bond market's down here and the stock market's still in the stratosphere. But that's why I would love to see this 5150. Then you're back into whack, and then you can go up on Monday. So I totally see what you're talking about. It's just too early in the day to try to buy a dip. So, but definitely I see what you're talking about. But this is what happens with a disparity and a parabolic market. So next thing, you might say, well, where do you buy NVIDIA? So another parabolic stock. Just keep in mind, when something is too far from its 50, it usually goes down at least so the 50 can catch up. So as you see, way above the 50, 200 points, over 20% is huge. First up, 1066. We've had that all over the chart patterns mastery room. Second thing, if it gets to 1066, you still need to see an intraday reversal. So that's what we're watching. And we don't have that yet. And I have no idea. And there you go, Genu. Yeah, it depends. Are they going to buy the tech stocks at the beginning of the month? It depends where the NASDAQ is today. But if they do, I want to see a reversal and a bull flag, which means I'm going to miss the beginning. But I do have an idea for you. If this goes down Monday into this zone, another 200 points, it's not that big a deal anymore. Remember, I was talking about it going down 700. If it goes to that area and let's say does that, I'm going to look for tech stocks that already are doing that on the left. So I'll try to buy the ones that are already exhibiting relative strength. So, yeah, I think you're going to be right. It's just, and I'm not trying to be glib. Number one, it's from where? Number two, for that to happen, you need to have the Russell have a lot better rally than this. I needed the Russell to stay up 20 points, and it didn't. So a lot of all bets are off because you're not getting as much positive divergence as you want. But Genu, there's no doubt in my mind that if the NASDAQ's doing this to that support zone, I'm going to look for stocks that already bounced and are forming bull flags, and those will be the leaders. So that's how I'm going to play it. Sorry to bang the mic. Didn't mean to. So that's where I am right now. Genu, definitely I will look to buy tech stocks that show unusual strength on Monday. I mean, you see in here, this, I can't share it. It's proprietary. I can share it on the paid size. But if you're under the ATR trailing stop, it's red on a 1 minute. There's only one above it. That's MongoDB. Now, I bet. Guess what's above the 1 minute ATR trailing stop? Dow stocks. Yeah, and you might ask, well, why on earth are you talking about the Dow stocks going up? Because of rebalancing. The Dow Jones Industrials is already at May 1st levels. Already at May 1st levels. Right here. So then the key is they're not, CRM is in the Dow. That is not going to help the Dow go up. So you got to have participation from other stocks within the group. So that's why you're seeing the Dow stocks up. Pretty cool. Now, Genu, definitely, if you see, let's say, Texas Instruments on Monday, exhibit that. While the NASDAQ is exhibiting this on the upper left, that'll be the group, the one I'll look at to buy. So no doubt. And I have no idea if the reversal is coming. Like I said, I do not bet on the reversal. I bet after the reversal and consolidation. I just can't stress that enough because I'll show you. I want to buy Generac. Everybody knows I'm really up on these stocks that are hurricane stock. So Generac, did Hormel go up? No. Got killed on earnings. You always on these hurricane plays, as these have a tendency to go up in the summer, you have to wait until after the earnings. So that's why when this might have had a reversal, after earnings, we waited for the reversal candlestick. The NASDAQ sure could have a reversal, but I need to see the reversal and then the consolidation. Reversal, consolidation. This, I would love to buy it in this area, but then I'm jumping the gun because you don't know if it's going to there first. So a lot of times when something goes to support, I might buy 1/10 of my position just for the urge to participate before it reverses. But right now, I see no reason to buy the NASDAQ. Now, you might say, what happens if it's only down 300? You were wrong. It's fine with me. I'm waiting for the reversal and the consolidation. And I mean, that's how I trade. I don't average down. So now I'll tell you, if you want to bet on some kind of reversal, then look for the stocks that are already acting better. Yeah, Tesla's acting better. So one way is to look at those ATR trailing stops. But in the tech area, I would look for whatever stocks refuse to go lower. Now, you might say, well, NVIDIA's near the support. So, Genu, I see your point that it's probably going down from rebalancing. Do we go and buy it? It's scary because it hasn't completely filled the gap. And this hasn't completely on the upper left gone to the May 1st levels. So I got to wait for those. And so if I miss something, I miss something. We had a really good morning and I'm just going to leave it like that. So that's where I am at the moment. Definitely, I'm going to look for what's withstanding the trend. So you see the ES is trying to catch up with a 1 minute something, whether you use a 20, a 21, an ATR trailing stop. Just keep in mind, if you buy that, let's just say you're a futures trader and buy that, you better have your stop at that candle because you're buying a bull flag when it's under everything. If it works, great. But what I do, Gino, is definitely look for what refuses to go lower now that some of these things are just getting pummeled. So if there is a reversal, you're going for the thing that already was acting the best. So if the markets sell off, hey, maybe it doesn't go down anyway. Let's look at Qualcomm and then I got to go. And I'll be back on at 3, Gino. Well, here you go. There's a perfect example of a stock trying to carve a bottom. The problem is it still looks so I just can't do it. Now, I will tell you though, if this gets to down 500, which is where I said I thought it would go, if this stays right here, yeah, I'll look to buy probably the 200 calls for the close. So just keep that in mind. So take care. Thanks for being with me and have a great weekend.